Today, we want to talk about very micro interesting trends that we have recently noticed for landed properties. This is now the new benchmark pricing in terms of entry price. 在录了吗？Alright, so welcome back to our Nuggets on the Go. This is episode number 9. Last episode number 8, that was like an episode dedicated to millennials and Gen Z. And of course, for the Alpha generation. So the Alpha generation is the generation that baby Ethan is in right now. And sometimes I just wonder, like, when he grows up, what's going to be the pricing of properties in Singapore by the time in about 20 to 30 years time when he's ready to buy a property. So it was just a thought of my mind, like, will like a 2-beta private property be at least a $2 million mark? I'm not sure. By the time when inflation and asset inflation happens in the next 20 years time, I think it's going to be very interesting on total price point that it might be pretty shocking at the way things are going. So let's have a look at today's episode. So today we want to talk about some very micro interesting trends that we have recently noticed for landed properties. In fact, we just finished our UOB and PLB plus FinLab collab webinar for a deep dive series into landed properties in the OCR and RCR region. So if you have missed that particular webinar, what we're going to do is that we're going to attach the link right down below for you to click in. You can input your name and email address, and then we'll send you the link to a replay of that webinar if you have missed it. And 2 episodes ago, we also have a link attached for you to write into us and then to put in your name and email address, and then we'll send you this, what we call hashtag WCWB, What Can We Buy series from PLB Insights team. So we have received quite a tremendous amount of response. Over close to about 250 of you actually wrote into us. Thank you for your response. We hope that that report will help you. And we have also noted some of your comments on some of the minute errors in terms of the distance from MRT station. So our team is working on it. Thank you so much for your feedback. We value all feedbacks coming into our Nuggets on the Go series. So if you have also missed that's based on the asking prices of July 2021 on some of the properties within a 500 meters radius from all MRT network in Singapore. So we hope that 83-page report is going to help you a little bit better when you hunt for your next resale private apartment. So if you have missed that, also click on the link below. We will send you again as well. Now, coming back to the UOB Deep Dive series, one of the key things and the key takeaway from this 1-hour webinar that we had with our audience from UOB and FinLab and Propertylimbrothers together was that notice in terms of the absolute quantum pricing of the increment in landed properties. And I want to bring out this chart to you. But meantime, just a quick note is that we have already pre-recorded this 1-hour webinar. So if you want to watch through the webinar at your own time and your own pace, if you have missed that live webinar, the link is below for you to key in your name and email. We'll be very happy to send you YouTube link that we have. This is the chart that I wanted to share with you guys today. The difference between an inter-terrace from 2020 to 2021. So we're just taking an example of inter-terrace because the key rationale is that if we are talking about some of the push in terms of pricing, for landed properties, the behavior is a little bit different because there are different classes of landed properties. So at the extreme far end, the luxury segment of landed property will be the GCB market, good class bungalow. They are a breed of its own. It is already a luxury segment that is detached from the market from the rest of the landed property because they are so limited in terms of supply. They cater to the ultra rich, ultra high net worth individuals and families, and don't take that into a comparison mode in terms of the general tier of the landed property. So it is purely because it's an ultra luxury product, right? So for the pure landed segment, sometimes the push comes in 2 variations, from the inter-terraces towards the corner and semi-D, and from the bungalows, which are the detached segment, and also the semi-D segment. So there are also different micro segments within the landed property zoning. But sometimes the push can come from the fact that there is a lot of demand from the entry-level landed properties. This time around, a lot of demand has came from that portion. And of course, a lot of demand has also came from within the entire landed segment, because most of the time when homeowners, they get into the landed property segment, sometimes they move within that segment. For example, they might already be owning a semi-detached, but when they see that price has appreciated, sometimes they want to exit and then move on to a detached. There are also different variations of move. Maybe family is owning a detached for many years, but maybe the kids has grown up, they move on to buy their own landed properties or condominiums. They want to move downwards towards a semi or corner, or maybe to an inter-terrace for retirement. So there are different movements within that variations, but this time around, let's have a look at this chart. This is based on the generic pricing of D19, D14, and some parts of D15. Not all parts of D15, because D15 is at a higher tier. There's the RCR region. Just an example, in 2020, and maybe in the range of about March to June period, you can get a landed property, an inter-terrace category in the range of about $2 million. $2 million range will be landed properties that is meant for you to rebuild. That means usually single-story inter-terraces. And then the second type will be the middle-age category, which is about 20 plus to 30 odd years kind of properties that need A&A. But the structure is good. Maybe it's already a 2-story, not 2.5, maybe 2-story, but you're happy to do an A&A to have more built-in area. And then the third category will be the newer versions, which are maybe already 2.5 or 3-story and less than 15 years old. Quite a modern design, plumbing renovation, and of course the fourth type, the brand new type directly from developers. So these four categories have this sort of like a price quantum in this particular range that you see at the bottom of this chart. But 15 months later, which is right now in the year 2021, we're in September right now. 15 months later, what had happened essentially is that while we are sitting here talking about the landed inter-terrace market in some of the OCR regions, this is now the new benchmark pricing in terms of entry price based on absolute quantum. You want to buy any properties that are meant for maybe rebuild. Usually they are in the range of already 2.8, some at $3 million. And properties that needs A&A, 3.5, 4 million, or maybe about 3.8 to 4 million for those properties that allows you to do a renovation. And of course, the brand new type, they are already in the range of 4.2 to 4.5 million dollars. So of course, there are a lot of assumptions that we didn't put in here because it depends on several different micro categories. Different streets sometimes have different variations. It also depends on the current condition of the landed property. So it's very hard to put a total, absolute, quantifiable amount. But this is just a gauge and a guideline based on some of the asking prices right now on the ground. So why do we want to share with you this is because if you look at the amount of percentage appreciation, this is not in line with inflation. Because take note that inflation, although our average inflation is about 2%, sometimes 1%, sometimes 1 over to 2 odd percent, but property category is not inside the inflation index. So basically, this is what is happening on the ground based on absolute price quantum appreciation for landed properties, inter-terraces in some of the OCR regions that we mentioned. So for the first category, 2 million to 3 million, that is technically a 50% price appreciation. So for example, in the year 2020, maybe January, you are already owning a single-story inter-terrace old version, $2 million. Today, 15 months to 18 months later, you could possibly exit easily at about 2.8 to 3 million. So you have seen like a 50% increment. Second category, about 40%. Third category, 33%. Fourth category, about 28%. Something to note for the inter-terrace category for those of you who are planning to enter into the landed property market. Back to this context, we're talking about pure landed, freehold and 999 years in nature. The new ones always drive the market on this particular segment. Why is it so? New ones meaning the fourth category. The key reason is because when developers buy the old ones and then they tear down and rebuild after about 1.5 years and they sell it, when that price inch upwards from 3.5 million last year to an increment of maybe 3.8, 3.94 million to right now 4.2, 4.5, they lead the market. And the new ones in the fourth category always lead the market upwards. Just like in the condominiums and apartments market, the government land sales, land bid pricing, developers new launch pricing always leads the market. And when a new PSF is being pushed, and that will create an impact to the surrounding resale condominiums and apartments. So the new sales and GLS always lead the market in the non-landed residential segment. So similarly for the landed residential segment, the new ones always leads the market. And when the new ones are being moved up to a new pricing benchmark, the first, second, and third tier categories of landed types, they will follow suit as well. So which is why you see this move in the past 15 to 18 months. So what does this mean? There are a few things for consideration. Let's say if we are looking at a landed property to buy, freehold 999, inter-terrace, some perspectives, but not absolutely a full-on kind of one-sided perspective. Some perspective might be like this. Number one, the 28% for the fourth type, brand new type, might be something that is very interesting to look at because it has increased by 28%, but it is not a 50% increment like the single story type that is meant for rebuild. So what this means is that I'm still getting into an inter-terrace, but it's already fully built for me, coupled with the fact that right now construction cost is getting higher, timing to construct, and of course I need to work with a developer and architect for the next 18 to 24 months. Maybe it might be a little bit better to go for that 28% increment compared to something that has already appreciated by 50%, and I can just move in straight on with my family, getting a brand new product. So that might be something interesting to consider and think about. Second variation, of course, the other perspective is that even if I were to go for the type that is still meant for rebuild at $2.8 to $3 million, even though it has seen a 50% kind of increment, but the entry price is still the least. That means I'm still getting into the landed market, 30999 inter-terrace, for the lowest quantum, 3 million. If I have a little bit more holding power, maybe I don't have to do anything now. Maybe I can wait for a little while, wait for land prices to increase a little bit more, and then I can see what I want to do, maybe take out equity term loan, maybe I can go for a construction loan, and I can maybe take my time for the next 24 months to rebuild something. But take note, of course, when you do that, factor in about 1.2 to 1.4 million for your inter-terrace rebuild. End up, you will still get back the same amount, which is about $4.5 million, but of course at your own design. So total cost might be the same, but I think it will always end up into the opportunity cost and time factor, or whether do I want to invest my time, rebuild myself, or do we want to have a little bit like an instant gratification and then immediately live into like a 4.5 million brand new one versus a 3 mil plus another 1.2, 1.4 million dollars to rebuild on my own. So different perspectives depending on op cost kind of consideration. All right. So one more thing is to note is that there's this chart that's very interesting. So this is from data.gov.sg. We shared this during the webinar as well. Now notice that in terms of non-landed property price index, vis-a-vis landed property price index, there was a detachment over here. Very interesting detachment. That detachment came after the Lehman Brothers crisis in the year 2008, 2009. After the recovery, the detachment started. All right, so sorry, let me drink a bit of coffee, okay? Why is there a detachment? This detachment happens and it's pretty interesting because that coincides with the onset of the start point of all the cooling measures in Singapore. And of course, what is the main catalyst? In our context, in our perspective, we think that the main catalyst could be the fact that there is an introduction in the ABSD for foreign buyers. So after this point, the introduction of the foreigner ABSD started, which started from less than 10%, and then it increased to today's 20% for the first private property that a foreigner will buy. Even the second property, of course, so on and so forth, is the same. But this is the race. This is technically the start point of the race to see the true blue kind of pricing preference or demand preference in terms of pricing for Singaporeans. Because technically speaking, after this segment here, there is a gradual downscale of the amount of foreign buyers buying non-residential landed properties, which is strata condominiums and of course apartments. So then this created this disparity in terms of landed being on the upper tier and then non-residential that is lower than the landed category. So take note, what we're trying to share is that the prices for these two categories still went up, because if you notice for condos and apartments, it went up. It's still a gradual uptrend at this current point, but there is a deviation right now in terms of landed properties and non-landed properties. The key rationale is because right now we're looking at a lot of transactions that are being performed by Singaporeans ourselves. What does this mean? This means that landed has now been a separate segment from non-landed, in the sense that it has now become like a breed of its own compared to the past, whereby it's always sticking together in terms of the price trend. There was like a slight deviation here. In fact, if you notice over at this juncture, moving upwards towards that 2006-27 period before the Lehman Brothers crisis. In fact, during that season, condominiums and apartments, their price index is higher than landed properties, because there was a lot of purchases done by foreign investors where there were no ABSD ruling and stuff like that, or buyer stamp duty tax on foreign buyers. So right now, we can see very clearly in terms of preferences, but I wouldn't say preferences purely, because that would not be a very accurate word. But what we'll see is that in terms of the money being put into the landed pricing segment on the absolute quantum price point of per square foot pricing, there is now a difference. This difference is pretty interesting because That means that if landed pricing continue to hold that difference with private apartment pricing, it's going to be a different breed of its own. And that means that when this breed is created long enough, it will then form a class of its own, in the sense that it will be at a benchmark that only a certain category of buyers can afford to get into that category. And what that means is that it then creates a stronger store of value compared to the other segments. So what this means is that it's a little bit like a luxury product. Of course, private residential properties in Singapore, they are definitely a great store of value. And in the world, when we talk about real estate, we talk about, in Singapore context, we talk about private residential property, because it is a different breed from HDB real estate, because HDB apartments are meant as an entry point for Singaporeans to own our first home, and it is for the main purpose as a need basis, right? It's not so much like an investment basis. So when we talk about real estate, we are really talking about private residential properties, because private residential properties, there are a lot of different factors that is implanted into this property itself. So for example, you can do equity, term loan on it, and sell and buy, with lesser restrictions. Of course, in the world, based on restrictions basis, of course, on the whole context of Singapore, based on restriction basis, HDB apartment has the most restrictions because they are really meant for us for our own accommodation. So when we look at private residential properties, landed vis-a-vis non-landed, this deviation and disparity is something that is interesting in the sense that landed, because of the fact that there are only about a supply of about 73,000 in entire Singapore compared to non-landed about 300,000. What this means is that even the entry level of landed property segment, the inter-terraces and maybe corner terraces, they will then evolve into a luxury breed, because the entry price now for absolute quantum has increased to this range, which also means that only a certain category of families and profile buyers can enter and own this class of asset. It will then form into its own breed of a store of value, which will maintain at this range, because what happens is that when an asset type gathers strength with limited supply, increasing amount of demand at a higher level of store of value, it will sustain in that same level, in that same realm, and it will become a better and better store of value in the sense, in the long run. This gap, we're not sure whether it will continue to widen, but we think that it will maintain a certain deviation through time that is already seen right now in the current segment. So of course, I think that also coincides with the preferences in terms of living, because the pandemic just basically escalated our need for space. And thus, a lot of people are starting to think about bigger and bigger spaces for their family's needs, working at home, studying at home, and things like that. So we will wait and see, and we'll see what happens. An update on the market is, of course, there are news of Fed's tapering. That means for the market in the next 6 to 12 months, when that happens in the States, and then that affects, the global impact in terms of money supply. So tapering, of course, when that happens, there might be a rate hike. There might be some sort of like spillover effect in terms of inflation and stuff like that for the US market. But what does that mean for the Singapore market? Now, let's come back to this chart. Very interesting chart done by Morgan Stanley Research back in the year 2018. So there was this chart talking about the last 5 rounds of rate hikes in terms of mortgage interest rate hikes. And the interesting is that over the past 5 rounds, when interest rates increase, property prices actually increase. So it's a little bit strange in terms of the Singapore market, because theoretically, when interest rates increase, our buying power technically decreases. Because when you buy a property, let's say example right now at 1.1%, the amount of interest that you pay to the bank is actually very much lesser than if you were to buy a property at, let's say, 2.2%. Just take, for example, these two comparisons. Let's say if you were to purchase a $1 million property at an interest rate of 1.5%, the amortization spread is basically of your total installment of 2,500 plus per month. Interest that you pay is about 937. Compared to if you were to buy something at 2.5% interest, that technically doubles from 937 interest that you pay to $1,562 per month. And the principal that you pay down is actually lesser in a higher interest rate environment. You're paying technically 1,650 compared to 1,004 when the interest rate is higher. So it is technically worse off if you were to buy a property in a higher interest rate environment, which results in the sense that whenever interest rate drops, a lot of people want to buy property first, want to buy property quickly, because to take advantage of that 2 or 3 or 4 years lock-in fixed interest rate for this particular purchase, right? But on the flip side, when we look at this chart, when we look at the history of the interest rates increasing in Singapore, it seems that close to 80% of the time, prices increase further. So why is that so? Is it because that Singapore is a little bit different? And when we do a combination of factors and we look at this from our research team, we look at the fact that there are so many internal factors and external factors coming into the Singapore real estate market as a safe haven, as a store of value. And for the very fact that we still have close to about 9 to 10 rounds of cooling measures within it, I think this is really something that we need to look at from different perspectives as well. To sum it all up, end of the day, I think it's important to also note that we have a very short horizon, because we have perhaps after your first property as a matrimonial property, you have perhaps about 20 to 30 years of cycle for you to enter and exit, or maybe to accumulate a couple of properties as you move on, and provided that you buy the right kind of asset, you buy the right kind of property at the right location, the right type, the right timing as well, you see appreciation, and from there you grow your portfolio. I think it's important to note and balance all these factors together. For a personal opinion, I think lower interest rates are definitely better for an entry point. But of course, there's so many different micro segments, and we talk about that a lot. I think one way to guide us is through a nice checklist, and of course in PLB you have this 2 full checklists of mode analysis for us to tick off. There's a point and scoring system. We do that for private condominiums. We also do that for landed property. So if you want to know a little bit more, you can of course make an appointment with our buyer consult team. The link is also right down below for you to check in with us. We do a one-to-one consultation, chat a little bit further. I think that's about it. Quite a fair bit of topic to talk about. But at the end of the day, we hope that this perhaps can add a little bit more value to you. Of course, if you have any questions or any suggestions for our next couple of episodes, do send us an email on insights@plb.sg. It's right here. We appreciate your feedback. Appreciate you watching our every episode of Nuggets on the Go. And once again, my name is Melvin, Propertylimbrothers. As always, we hope to see you on the next episode. Take care. Microphone. So what does this mean? Okay.